Good morning, everyone, and welcome to the European crossover webinar. And we have the German IFO data coming out. We'll see German IFO business climate. 85 is for the Reuters poll. Comes in at 86, just a hair bit better. Current conditions, waiting for that to be released, as well as expectations. Nothing yet on current conditions or expectations, but business climate did improve a little bit. 81.3 on current conditions, a little bit less than expected. They're looking for 84. And just waiting for expectations, which comes in a bit better here at 91.4. You can see here that we're moving up a little bit here in the euro with a little bit of volume. As I mentioned here, just in the chat room, look, the euro's trading, as I said, pip for tick with the spoofs. Look at this. This is identical. Look at this. Picks up, spoofs drop, euro drops. I mean, look at this. Literally pip for tick. Pip for tick. Look at that. Look at this. So no technicals needing. Just simply follow the spoofs and it'll tell you what the euro's going to do. Okay. Like I said, it's just trading pip for tick. Here we can, like I said, I've got the euro up here. We'll just jump into the indices just for a quick overview with that, and then we'll jump back into the euro. Hang on. Okay, here we are with the spoos here. As it shows you, the euro's following that, as I mentioned, pip for tick. Bear with me there. And here we are in the 5 minute, 30 minute, and the 2 hour. We did go on and see yesterday with the spoos making that run up here to 31.40. But as I mentioned yesterday, I said it's all about this 31.23 and what's going to happen there. And you can see here that that's exactly where we went to for support. Saw a nice bounce above that, got to this 31.42-ish, roll back. And once we got a close, and I said a close, 30-minute close, which we did not hear, 30-minute close below 31.23 would open the door for us to go lower, which lowers what we did go and move. Actually, eventually moved down here to what, around 31.05, maybe 07. We rallied back to 31.23. Notice how we did not close above 31.23. We rode all the way right back down. And then finally we get the close just above 31.23. Market gets a little bit fake. We dip back below it. And then once again, we close below it just a hair bit into the 31 teens. We make one more jump back in here. We can't close above it. And we roll back down the hill down here, and henceforth we've seen the follow through with the euro following. Essentially, the dollar's trading with the S&Ps, and the euro comprises 56.8% of the cash dollar index. So whichever one you want to go on and say, whether it's the dollar index or / euro, but really, if you're looking at the euro, it's basically just trading, as I said, pip for tick with the spoos. So that's the layout here in the spoos. But we are still above 3100. We'll see where that goes and takes us here with the euro. Let's go on and jump back to the euro. And you can see how we made it back up here in the Asian session before slipping back. A moment. There we go. Right up in here, this 31.47, which was a 50%. Made a run up here earlier. Quick little dip. This is one same day VWAP. We're holding above it, make this run appear to essentially 1346. Quick dip back down here just below 3130, make another run to take that out right at 3147, which is a 50% back. We roll back, and like I said, it's trading with the S&Ps. So once the S&Ps broke, that was all she wrote. We slip under same day VWAP. Here we are, 2-day VWAP. You can see here that dip down here was supported not only at the 1323, but you can see here we've sliced right through the 2-day VWAP. But once again, it's really going to depend on what happens with the SPOOs. That's what, the SPOOs are what's driving the cash dollar index, which, as I said, the euro will trade quite often almost pip for tick with the cash dollar index. But like I said, for simplification issues, we're just saying basically, which is true, the euro's trading with the SPOOs. That's here on the 5-minute. When we get a little bit further look back in here, and you can see here that on the 30-minute, we've been on this buy mode. We're just about to cross into a sell mode right now. Just about. I mean, you could almost say, yeah, we just barely just dipped below that right there. And the little purple mark is where I have when we were up in here, where I thought they'd come back for support. You can see here, that's where they end up going here. So we've just gone and flipped it to the sell mode and taken a look at the 2-hour and posted this in the chat room when we had this, the close, and posted a basically a little bit longer wick than you normally would see with the gravestone doji, but nonetheless a negative take. And we saw that dip. And notice how we were not able to get past this 1347. And that was significant here. You can see here, came up here to tag it on the 2-hour and really opened the door for us to work lower than we did. And we're coming down here to support into this 1312 area here. If we take a look at the cable, and once again, we're just looking at it at the futures. Quick little bit diff here in the cable for support. Cable also, just like the euro, has broken through 2-day VWAP, kind of come back up here to challenge it. A little bit of support here, and that's with the 6B, which is trading, let's see, 24.95 is trading just at about a 7-pip difference with the spot. And you can see here on the 2-hour yesterday, just like with the euro. Now this was a bit more pronounced, this gravestone doji, you see here. And we're actually holding right here a 2-day VWAP. Actually, this VWAP is actually for the most recent low. It's an anchored VWAP. You can see right here for the low on May 17th. So that being said, let's look at the data for the balance of the day as far as economic data. So we did get a French business climate, which came in a little bit weaker than expected at 77. But as I mentioned, we just had German IFO business climate that came a bit better at 86.2, along with current conditions and expectations. Current conditions came in just a hair bit weaker, not a bit of a surprise. But as we roll into the rest of the day, do have Mexican core inflation at 7 a.m. Eastern. And then we have monthly home price at 9 a.m. Eastern. That's going to be it. So very, very light calendar today. With that, we'll just go and move into the news for a little bit of a flavor to set the day. Okay, so the dollar squeeze as data stokes economic recovery hopes. The dollar was under pressure on Wednesday after upbeat data in Europe boosted the euro and helped stoke hopes for a global economic recovery, underpinning appetite for riskier currencies. The euro is headed for its best month gain against the dollar since October, an inch higher to 13.16 in the Asian session. But of course, like I said, we've turned weaker and we've turned things lower. Let's go and pull this up here. Make it easier. There you go. Lost sight here, and you can see we're dipping back. The IHS June Eurozone Flash Composite Purchasing Managers Index, a broad gauge of economic activity, beat expectations with a bounce to 47.5, although it's still below the 50 mark, separating growth from contraction. The improvement in business sentiment, together with upbeat data in Britain and the U.S., lend support to a sense that the growth is returning at pace. The next test will come from the German confidence survey, which we just got. In the meantime, the positive signals seem enough to offset worries about a resurgent U.S. coronavirus cases. And against a basket of currencies, the dollar was flat, just above a 1 week touched on Tuesday. We're still seeing the counteracting forces of the economic recovery on the one hand and concerns around the virus spreading on the other hand, said Kim Monday. But overnight, Eurozone PMIs lifted, PMIs in the UK lifted, and PMIs in the US lifted. So the economic story that we are seeing, the recovery is helping to underpin the commodity currencies. The British pound found support, recovering from a 3-month low against the euro on Tuesday. Against the tide, the New Zealand dollar dipped to 64.68 after the country's central bank said the balance of economic risk remains to the downside, is prepared to use additional monetary tools as necessary. But they did keep interest rates on hold as expected. The moves extended stubborn optimism in the face of spiking coronavirus cases in the U.S. and Germany and elsewhere. For a second week, Texas, Arizona, and Nevada set records for the coronavirus outbreaks, and 10 other states from Florida to California were grappling with surging infections. Australia's Victoria state has self-imposed restrictions on gatherings amid an upswing in new cases there, and Germany's imposed localized lockdowns after an outbreak at a meat packing plant. So far, the market assumes there's a very high bar to shutting down the entire economies again, so the impact on business activities will not be too great, at least as of yet. We expect over the coming couple of weeks, we'll get more clarity on the state. Governors will be in a better position to decide how to proceed, said economist Tom Porcelli. For now, we have not seen any negative shift in consumer behavior as of yet. And gold soars to a near 8-year high as fears of second virus wave grow. Gold climbed to its highest level in nearly 8 years. And I'll take a look real quick. Here's gold, August gold right there. Phew, man, we're still up here near the highs. Look at that. Holy smokes. Gold climbed to its highest level, and the fears of a second wave of cases, particularly in the U.S. and also in Latin America, are driving concerns about sustained weakness in the economic recovery, and that's certainly supporting safe haven assets like gold, said ANZ's analyst Daniel Hines. Continue to support the central banks are likely to provide the market with bond purchasing programs and monetary easing. Central banks worldwide have adopted aggressive stimulus measures and kept interest rates low, keeping gold prices surging more than 16% this year. Treasury Secretary Steve Mnuchin said the next stimulus bill will focus on getting people back to work quickly, and he would consider a further delay of the deadline to file tax returns. Several U.S. States reported record infections, and the death toll in Latin America passed 100,000 on Tuesday. The European Union is prepared to bar travelers from the U.S. because of a surge in its cases, putting the country in the same category as Brazil and Russia, the New York Times said. And more so a little bit on gold, and you can see here that the euro is continuing to move lower here. Gold surges to the highest in nearly 8 years, while global shares cooled as the signs of acceleration in the coronavirus kept investors on edge. The European Union is preparing to bar U.S. travelers. We did see that. There's some good news in markets, with emerging markets climbing to a 3.5-month high. They were up 0.5% on the day. with the broadest index, the Asian Pacific shares outside of Japan, adding 0.5% to reach its highest since the pandemic lockdowns. Even if futures reversed earlier losses to gain 1/10, global equity market futures are struggling to gain gains today. Likely no other reason than with the rising daily COVID-19 case in the U.S. remaining front page news against a broader backdrop of concerns, a weaker U.S. dollar, that a jump in infections will lead to a more stimulus measures. Gold should remain on a reasonably constructive path. The dollar and risk sentiments are likely to remain broadly negatively correlated, barring the U.S. displaying clear and enduring leadership for the global economic recovery. The New Zealand dollar eased after the country's central bank said it might have to do more yet to stimulate the economy, including cutting rates further. Eurozone bond yields broadly steadily were a focus on Austria, which is expected to sell a new 100-year bond that will raise 2 billion euros, one of the longest dated bond sales since the coronavirus. Germany will also visit the primary market with its first reopening of a 15-year bond, which is expected to raise 2.5 billion euros. So I guess you can see that would also add a little bit of a negative tone with the euro. With that, we'll move into the analysis. Mark said that can you cover the Dow, which I really don't cover the Dows. I mean, I look at it, but I don't pay too much attention, but I'll take a look at it quickly. So sure, Mark. Once again, I'm focusing. You can see here now the SPOOs are down here. They've broken 3,100, and they've even dipped down here to 3088, which you can see that's having its own impact with the euro here also. Let's go and take a look at it and see the SPOOs continue to break down here into a little bit of support here at 3084. We're almost there. Let's take a look at the Dow Futures. Right there, you can see 25,735. You can see that right there where they're finding support here. So we'll there. You can see there, which is equating to essentially what we are here with the SPOOs that we've almost made 3084. You can see here. And a decent little pullback too. If you look at here, don't forget this is that dip we saw in Asia when the whole debacle about the China deal supposedly being called off, and it wasn't. Let's take a look here. 3093, that's a 61%. So we've already blown past that. So we've really taken a pretty good little knock here, almost at 3084. We're coming off of that. And if you look at the Dow Futures, going along with that, well, they're actually just have taken out the 50% of that move. And once again, as I mentioned, support here 25,735. We're actually 25,741 right now. We just dipped below that, but you can see you have the 50% there too. So probably try and make a little bit of a hold right in here. But certainly you can see here on the 2-hour chart, you can see here we posted a Gravestone Doji. So it really opened the door for us to move lower. But keep track of this whole area here, 25,735. You can dip a little bit lower right there. 25,725 right there. So this area right here, we should see some demand coming here, which would equate to the same area here in the SPOOs at 3084. Right there. There we go. So that helps you out right here. This whole area right in here. If you're short, it's a decent area to be looking to go on and cover, or at least take a decent amount off the table on a very short-term basis. But we did get, like I said, that gravestone doji here. With that, let's go and move into the analysis. Yeah, you're saying the Aussie is trading with the SPOOs. Yeah, well, I mean, because the Aussie is a risk on, it generally moves that way. Not that the euro isn't, but the Aussie generally is expected to be more closely aligned with what we see with equities. Definitely considered a risk on currency. Oh, you're more than welcome, Mark. Let's go and start with the analysis. So looking at the euro, so the euro extended its gains on Tuesday, nearing the weekly level of 1356. You can see that here, before paring back. Resistance on Wednesday will be 1372, but you can see here we've kind of rolled back and we're still trading in a relatively tight range, but a little bit of a downside action. Would be the 1372 with support at 1270. So we'll go definitely with the 1270 here. Now, looking up in here, 1356 remembers that huge weekly level here coming across, and you can see here we've made a couple of forays to that. We haven't been able to get past that. Looked like we were going to start out the day a little bit stronger. Right from the get-go in Asia, we were having some trouble, so we'll keep this 1356, the weekly level. We're going to go stay with that as far as more significant as opposed to, I thought we might have started with a little bit of a positive side to push this further, but we did make a pretty good recovery on Monday. Remember the swing we saw on Monday, followed by Tuesday, so the market take a little bit of a breather here and a little bit of a downside pull. So 1356 is going to be the resistance, so we'll stay with that as far as key resistance. Let's go and move into the cable. Looks like these majors are taking a bit of a dip back compared to the way they were before. Moving on to the cable. Cable extended its reversal on Tuesday. Key resistance remains the weekly level of 2602. Support will be 2424. Well, like I said, a little bit of a pair back today on both the euro and the cable, although we're in a very, very tight range. We will go on and go with the 2602. Not expected to be hit today, but it's if the dollar were to come under some pressure, it's going to be the more significant. But for today, let's go and take a look at a 2-hour because once again, having it that far out doesn't do you much good. So 2602, we said that is key weekly, but you see we're under some pressure. It's going to be right there, this closing bar here, which is 25.36. Yesterday we had 25.48, which the high was 25.43. I guess that wasn't too bad. 25.36. But we will stick with 24.24 for the low. Well, it really is in a tight range today. We'll move into the Aussie. So the Aussie pushed higher on Tuesday before closing in the middle of its range. You can see right here. Resistance will be 69.98 with support at 68.33. So we're just we're really trading, although a bit negative, we're really trading in a very tight range though for today's session in these majors. So we'll give it the old 69.98, which might be a little bit of a stretch up in here. Especially with SPOOs under some weakness. Support at 68.33. One of the concerns I had yesterday is, and I thought with all the volatility and the moves that we'd seen in SPOOs, I felt that people were just going to back away yesterday. And although the market tried to hang on, really opened the door for us to come down. So you can see, remember we were trading around 31.40-ish, 31.35, and look how much we've come off. We've dipped down to 30.85. So we've come off essentially 50 handles. And really after the open, remember that we had in Asia on Sunday in the SPOOs, and then we come all the way back. A strong close on Monday, essentially nearly 100 handles off the low. And then we fall in the Asian session on the comments that there's no deal in Asia from Navarro. Then it's disputed. They come all the way back. I'm thinking, boy, they really worked some people on both sides of the market. Whether you're bullish or bearish, I happen to be just lucky. That's it. I mean, I was short, but and I was actually down. And then I stepped away from the desk, as I mentioned to y'all, and then I come back about 25 minutes later, and the market's like really under some kind of pressure. But I'm saying is, for those that were bullish, and it certainly looked like you were open to being bullish with that close we saw on Monday, then they got worked and got stopped out. And then the people that may have got excited on that move lower, and it certainly looks like, okay, we're going to head lower, then they got worked as the market went up. And I think you just probably lost a lot of people that just weren't interested in being part of it yesterday. And we saw very low volume yesterday. I noted that several times. So it's not surprisingly that we've come back taking this dip this far. But we want to keep an eye on the euro and the cable. They're open that they could go higher, but certainly, like I said, the move that we see in the SPOOs has impacted it, but probably could have even been a bigger impact. So we'll see how we traverse over the next couple of days. Let's go move into the Kiwi. A little bit of a background as far as technically speaking. Look at the Kiwi. The Kiwi mirrored the same price action as its cousin, the Aussie, on Tuesday. You can see here essentially same type of bar, finished in the middle of the range. But look at this, where we are right now. We did have the RBNZ come out. They kept rates unchanged, but they certainly opened the door for taking further action. Hence, we've seen this pullback. Resistance will be 65.47 with support at 64.26. And I think we can keep this 65.27 here, because in light of what they did, it's certainly like as if, despite what the SPOOs are doing, it's not like as if they're going to be pushing hard, because they have opened the door to doing further action. So we'll keep the resistance the same at 65.27. Let's now go and move into dollar CAD. So the dollar CAD remains anchored around 135. Support continues to be 34.63 with resistance at 35.65. Well, the high so far is 35.85. We've pushed with the dollar strengthening a bit, so we pushed beyond that 35.65. Once again, we've got the dollar working much stronger in light of what the equities are doing right now. So once again, you can see here we held. I don't really see equities turn around and flying off the handle going forward. So we'll go with this low. We do the analysis in Asia. Things, like I said, have turned around with the equities coming under quite a bit of pressure now, which isn't surprising considering the calamity we've seen since not only Sunday. We rally 100 off of the lows, nearly 100 off of the lows to close on Monday. A very strong close on Monday, actually at the highs, nearly 100 handles off. Then the debacle with the China trade deal, and then to come all the way right back again. I think you just knocked so many people out of the box that probably were just going to say, you know what, no, I'm going to step away. And I think that's why we're seeing this pair back here. And then obviously, like I said, we're finally starting to see these concerns with the coronavirus here in the U.S. starting to pick up a little bit of steam as far as impacting. And so, like I said, we're starting to see some strength come into the dollar. So realistically, at this point, we have to go with where we are now. So would it really be 34.63? No, we'd have to go and say that the support would be the day's low from yesterday, which would be then at 34.80, 34.82. And as far as the upper portion, as far as resistance, it has to be this close right there, which would be 36.06. If we can get up there, I think you have to allow for that too. Potentially, we may not get to that also either today, but we have to know where the resistance would be. If you're getting short, where's your risk? And the risk would be, let's call it 36.06. We may start to see some follow through these equities as we finish out the week. We're just in the middle of the week though right now. Let's go to the dollar peso. Dollar peso weakened slightly on Tuesday. Support remains 22.16 with the resistance now at 22.71. And you can see we're trading really tight. So 22.71. 22.16. That stays in place. And we'll move on to the dollar yen. Things have quieted down since yesterday's quick dip down in here. And Blake did go on and mention that it looked like we were going to be taking a dip down there with that. Bear with me. And let's go move into, let's go back in here. So the dollar yen broke through support at 641 on its way towards 6 even before recovering back to 650. Resistance will be 690 with support at 585. So we're leaving open the door for us to go and dip back here. But just like the other majors, we're trading a very quiet day. And boy, look at the dollar yen after the big wider range. It's not a huge range, but compared to what we've been doing, is a pretty big range. But now we've just gone dead quiet here. Look at that. Graveyard trading now. But we're going to allow for that if we do go and move down to these lower levels. So let's go on and bear with me. The door is open for them to move lower over time. Let's go move in now to the cash dollar index. So the dollar index saw further follow through on the downside. Demand was found at 96.40. A further break opens a door to 96.54. If we do already go and break lower, at the moment it doesn't seem like that's the case because the FX is currently following the equities rather closely, especially the S&Ps. With resistance is going to be 96.96. So let's go with that resistance. And yesterday we did find support at that 96.40. Now, before we get there, we said we would have immediate support if we were to break lower at 96.22, and we'll mark that off. Well, it doesn't look like that would be the case, but if we were to take a dip, that's where you're going to find that support. So with that, that covers the majors. We're going to move into the cross rates. Bit more follow through here on the Kiwi yen here. Look at that. After we we had a nice turnaround on Monday, kind of took a pause here on Tuesday. You can see here, bit of a range, but we closed it just a bit negative and look more follow through. Support's going to be right there at that level, right there, 68.40. And we're just going to go with the level here. You can see we do have a close above here, but we're just going to go straight up with the level right there, that key level with the pink bar here. And that's going to be 69.0. Let's just call it 69.02. And we'll go and move into the euro yen. Boy, look at this. Now that's a medium-legged doji. And look at this wide range, and then we finish right in the middle here. So it really opens the door for them to pare back a bit, and we're just not really seeing it. We're keeping even pushed a little bit higher. So interesting, and we're pretty much in the middle of its range, maybe just a hair bit lower. Support. We'll just call here. It does open the door for us to move back lower, but we'll just go with that low for the day, which is going to be 1992. And resistance, we're going to go with the, you can see right here, this open here, that's going to be resistance, which is going to be, well, actually, that was just, we took out the high just a little bit beyond that. But that's it, 20, we'll call it 2065, and it looks like the high was 2075. So it's going to be 2065. And let's go with the euro. we are still dead in the water here. This market is just not moving whatsoever. So there's not going to be any changes here on the euro. That's going to remain the same. 6202, 6448, see if we can trip the stops in here, but we are just absolutely dead in the water. And let's go and move into the Euro Kiwi. A little bit more action here in the Euro Kiwi, and you can see right here, it's just going to be this level here. So we're starting to wake up just a little bit. We're actually above that day's open here. So resistance clears the bell is going to be right there at that level, 75.96. And support right here at this level here. Just going with the levels. Essentially, that's it. And probably could do a little bit better than that. Right this close here. See it right there? 74.38. 74.38. And let's go move into the guppy. Well, actually, the Aussie yen, I should say. Oh, boy, look at this. Just no movement, which is, boy, what a tight range. This is a bit surprising considering the dip that we've seen here in equities. But we're really trading very tight. Support's going to be this low bar here, right there. Confluence is actually with this close here. So this support is going to be 73.32. Just a little bit lower than we had yesterday. 4 whopping pips. And the upside, right there, which it did get above it, but we're going with that technical level, which is 74.02. And let's go move into the guppy. A little bit wider range in here, not a whole lot, but just a little bit better. You can see the support level. That's right there. You can see this key level. That's going to be support. 32.54. You can see the market trying to make a little bit of a stand after this big dip over the last 2 weeks. Resistance is going to be this bar's open. $34.28. $34.28. See if they can get up there, but that'll be resistance. And finally, with the starting odd, trying to hold these lows after taking out that 80.89. And that still continues to be resistance now, which is support. Continues to be resistance 80.89. And on the dip side, yesterday's low was 79.09. They still pressed it. So the support's not going to be this low bar because we're thinking that's going to hold here. So the low here is 79.45. Any dips back to that, if we're going to hold, it's going to have to hold right there, 79.45. So that covers FX. We'll just take a quick jab back into equities. You can see here the SPOOs. Here at the almost made it here to 30.85. We've rallied 11 handles off of that. Look at that, pretty good volume in here. You see that? So we talked about that also with the Dow Futures for Mark. You see here, that was 25.725, and you can see how we've rallied over almost 80 handles off of that low. You can see the touches here. And look at that. Good volume in here. Look at that. Pretty decent volume as it came into this area, held, and we since then pushed higher here. Looking here on a 5-minute chart, almost like a little bit of a hammer. And once again, we're trying to push a little bit higher. We'll move it back into the euro now. You're trying to pick itself up, not as dramatic as the move that we've seen here in the SPOOs, but trying to pick itself up a little bit. But 13.23 is key. That was low support for yesterday. You see that? That is also going to be 2-day VWAP with same-day VWAP at 13.30. So pullbacks are going to be a little bit harder to come by. And now we're in sell mode here. Well, that's with the cable. We'll take a look at the euro. It's also in sell mode. So momentum has changed now. We were in a pretty good little buy mode there for a while. Look at that. And gold, as we mentioned here, look at that, on its highs, 1790. And you can see here cable almost made it back here with the 6B, which is a 7 pip difference right now with the future with spot, but 25.15. But you can see here ran into a little bit of trouble at same day VWAP, which if you can see here, we almost have like a little hammer bottom almost, similar to what we had in the euro. So if you got long in here, not a bad area here to take some off here at same day VWAP, but we do have some resistance coming in at 25, looks like about 25.13, just a little bit higher here, which would probably equate to about 25.07, I guess, 25.06 in the spot. But that'll do it here. You see here, you're trying to still work up a little bit higher. But that'll do it for us here. And thanks for joining us here on the European Crossover webinar. We'll see you in the chat room.